Bitcoin has surged to an astonishing intraday high of $122,800, pushing the total cryptocurrency market to a staggering $4.13 trillion. What does this mean for investors in the crypto landscape? Let's break it down. Looking ahead, the cryptocurrency market faces a pivotal moment. Bitcoin recently climbed to a remarkable $122,800, generating excitement among traders and investors alike. This surge is not merely a fleeting moment, it signifies a critical juncture that could shape the market's trajectory in the near term. Historically, Bitcoin's price movements have been influenced by various factors, including regulatory developments, technological advancements, and macroeconomic trends. Two likely scenarios could unfold in the coming days. First, if Bitcoin maintains its position near the $122,800 mark, traders may interpret this as confirmation of a new bullish trend. This perception could lead to a further increase in prices and greater trading volumes, reinvigorating interest in digital assets. Such a scenario would not only boost Bitcoin, but could also positively impact altcoins, creating a ripple effect throughout the entire cryptocurrency ecosystem. Alternatively, if the momentum fails to hold, profit-taking could trigger a market correction, pulling Bitcoin and altcoins back to recent support levels, potentially around $100,000. The broader context involves ongoing institutional inflows and the demand for exchange-traded funds, ETFs, which are critical for sustaining this price breakout. Institutional interest has historically acted as a stabilizing force, providing legitimacy to cryptocurrencies and encouraging retail participation. Experts suggest that if this trend continues, Bitcoin could push toward $130,000 within the month. However, a shift in market sentiment could result in a rapid retracement, raising concerns about volatility. The impact of these developments extends beyond just price movements. They influence investor psychology and market dynamics. As we move forward, one critical question remains. Will Bitcoin's new high inspire sustained investor confidence, or will it trigger a wave of profit-taking? The coming days will be crucial in determining whether the cryptocurrency market enters a new era of growth or faces a challenging period of adjustment. The journey to today's Bitcoin high has been shaped by a combination of market momentum and increasing institutional demand over recent months. As of now, the cryptocurrency market cap has seen a notable increase of 11.1% over the past week, with a day-over-day rise of 2.8%. This surge is largely attributed to significant players like MicroStrategy, which have been accumulating Bitcoin as a treasury reserve asset, further legitimizing cryptocurrency's role in traditional finance. This strategic shift reflects a growing acceptance of Bitcoin as a safeguard against inflation and economic uncertainty, especially in a climate where traditional currencies face depreciation risks. The emergence of Bitcoin exchange-traded funds, ETFs, has also played a crucial role, attracting substantial inflows from both retail and institutional investors. Historically, similar surges have followed patterns of increased adoption and speculative trading. However, the current involvement of large corporations indicates a shift towards long-term investment strategies rather than short-term speculation. Previous high points in Bitcoin's history often resulted in market corrections driven by profit-taking and panic selling. Yet, the current environment suggests that this surge is supported by a more stable foundation of institutional investment and broader acceptance of cryptocurrencies as viable assets. The implications of this shift are profound. As institutional players continue to enter the space, they bring with them increased credibility and stability, potentially reducing volatility in the long run. Furthermore, the growing infrastructure surrounding cryptocurrencies, including regulatory clarity, could bolster investor confidence. Looking ahead, if institutional demand continues to rise and retail participation remains strong, Bitcoin may solidify its position as a mainstream asset class, paving the way for further innovations in financial technology and investment strategies. This evolution could redefine how we view and interact with money in the digital age. The recent surge in Bitcoin's price has reached unprecedented heights, marking a significant milestone in the cryptocurrency market. As Bitcoin climbs to new record levels, it is reshaping liquidity and altering risk appetites among investors. This shift prompts a reevaluation of investment strategies, particularly among the approximately 40% of active cryptocurrency investors directly affected by these price changes. Many are now considering how best to realign their portfolios to navigate the new price dynamics effectively. Historically, Bitcoin has been viewed as a bellwether for the cryptocurrency market, influencing the performance of altcoins and other digital assets. With Bitcoin's resurgence, sidelined investors are reassessing their positions, grappling with the choice of investing in Bitcoin, which has established itself as a market leader, or exploring altcoins that have recently outperformed Bitcoin on a percentage basis. This decision is particularly challenging as many altcoins have shown remarkable growth, attracting attention for their potential high returns. The broader economic implications of Bitcoin's rise are profound. Increased investor confidence is likely to lead to higher trading volumes, which can contribute to greater market stability. The rise in the Fear and Greed Index to 63 indicates a prevailing sentiment of greed among investors, a condition that historically has resulted in market rallies. This shift not only impacts seasoned traders, but also has the potential to attract new participants to the cryptocurrency market. For the average person, this surge could translate to increased volatility in investment portfolios, particularly for those who have ventured into the cryptocurrency space. As Bitcoin gains mainstream attention, it may reignite interest in cryptocurrencies as viable financial instruments. This renewed interest could lead to further innovations in the sector, enhancing the overall market landscape. Looking ahead, the trajectory of Bitcoin will likely continue to influence the cryptocurrency market significantly. If the current momentum persists, we may witness a broader adoption of cryptocurrencies, leading to more robust infrastructure and regulatory frameworks. Furthermore, the potential for institutional investment is increasing, suggesting that Bitcoin could soon be viewed not just as a speculative asset, but as an integral part of diversified investment strategies. This evolution may reshape financial markets in ways we have yet to fully understand. On June 14, 2026, Bitcoin reached a remarkable intraday high of $122,800 at approximately 2:30 p.m. UTC. This unprecedented surge has catapulted the total cryptocurrency market value to roughly $4.13 trillion. This spike is not just a number, it reflects a significant shift in market dynamics that could redefine the landscape of digital currencies. The Fear and Greed Index, a popular measure of market sentiment, has risen to 63, indicating an increase in bullish sentiment among traders. This movement comes amid a backdrop of heightened institutional interest, with notable purchases reported by companies like MicroStrategy and Metaplanet, which are both known for their strategic investments in digital assets. Furthermore, Bitcoin's breakout coincides with significant inflows related to exchange-traded funds, ETFs, which typically signal increased investor confidence in the market. Unlike previous surges, this one is distinctive due to the simultaneous strong performance of various altcoins, suggesting a broader market participation rather than a Bitcoin-centric rally. This diversification in asset performance indicates a maturation of the cryptocurrency space, where investors are increasingly willing to explore beyond the leading digital asset. The current surge is also linked to macroeconomic factors, including ongoing inflation concerns and the potential for economic stagnation, which have prompted investors to seek alternative stores of value. As traditional markets face volatility, cryptocurrencies are being viewed as a hedge, further fueling demand. This shift could have lasting implications for how digital assets are integrated into mainstream financial portfolios. Traders are now faced with a critical decision: chase this strength or await a potential pullback. The sentiment is palpable, with many fearing that a correction could be imminent after such a rapid ascent. However, the influx of institutional capital and the growing acceptance of cryptocurrencies may provide a cushion against sharp declines. Looking ahead, the cryptocurrency market appears poised for continued expansion, driven by both retail and institutional interest. As regulations evolve and acceptance grows, the potential for Bitcoin and altcoins to achieve new heights remains strong. Investors will be closely monitoring upcoming developments, particularly in regulatory frameworks and institutional adoption. as these factors will shape the future trajectory of the market. The upcoming weeks will be crucial in determining whether this bullish momentum can be sustained or if a correction will reshape the landscape yet again. As Bitcoin reaches new heights, will this inspire confidence among investors, or will we see a pullback? Share your predictions in the comments and subscribe for daily deep dives into the world of cryptocurrency.